I think we'll continue this line of case studies, and how can we really see practical examples of this with Dr. Rita Sobral, which will give us a speak on a case study of peer-to-peer insurance and parametric insurance. And Dr. Rita Sobral is a Harvard LLM and a New York attorney where she has practiced for the past few years, and she has recently joined the London's office of Cooley, where she's been working and researching on the topic of fintech and blockchain in the recent years. And I think we already have it with us, and I will pass the stage to her. Thank you very much.
Hi, I'm indeed here. Hi, everyone. It's a pleasure to be here. Just like my brilliant panel, or part of it, because Florian was in person, and Mario was too, but Rob and we couldn't make it. I couldn't make it for visa constraints, unfortunately, because I'm in the process of moving to New York to London, but it is a true pleasure to be here with you online. Conference has been fascinating. I am aware that I'm the last speaker of this demanding day, so I promise to be as dynamic and fast-paced as my Americanized self allows me to be, and I'd love some time for some Q&A. So we are indeed going to be talking a little bit about blockchain and insurance. In some ways, Roger, Mario, and Florian's presentation gave us a lot of what we need to really dig into the case study and think about the practical implications of blockchain, particularly thinking about the insurance business model, right? What is the insurance business model? It's a model that is incredibly resilient if we think about how it has developed, but at the same time, very resistant to the digital effect of emerging technologies. If we think about how today clients still call in, process paper contracts, and do a ton of the things on lists, it's quite insane. What that means is that the insurance industry effectively faces a PR crisis and a functionality crisis. Everyone hates their insurance companies. They feel spiteful, and they want to really, there's a lot of fraud. So we know that there are things out there that get feelings going against insurance companies. And blockchain's here potentially to save the day. Exactly because, as we heard, blockchain is essentially a continuously growing list of records. Put simply, blockchain technology really is well suited to record events, manage records, process transactions, and trace assets. A lot of what happens in the insurance space fits that model. By using shared ledgers and smart contracts, which we've heard a lot about today, you can effectively issue insurance policies, process claims, and do the underwriting process much more efficiently and with much more accuracy. We'll get into details, but based on everything we've heard today, I assume some pieces would start coming in when the statement's made. So taking a couple of steps back, right? If we're thinking about smart contracts, the way that the insurance industry meets blockchain is that the insurance agreements would be entered into and recorded and validated into a blockchain, which can then automatically execute and enforce this contract. There is the mentality of the if-then, or there's an expression used around the if-then contract around the smart contract, if that's one of the concepts that we accept based on what Roger very rightly talked to us about. And so if that is and then the case, so for example, if my flight is delayed, then I will be automatically compensated. This is the logic. Of course, there are limitations, and we're going to talk about them, but there is no question, and this is really my standing, and I think a lot of the people in the industry, that the efficiency and the add-on that blockchain can bring to the insurance market is substantial. So sort of diluting on those benefits, right? So as we were thinking about, it enhances, as we were discussing, it enhances efficiency because so many of these processes are paper related and time consuming and the like. Blockchain streamlines it. It increases trust because, as we just heard from a number of our speakers, and the cryptography in blockchain just ensures that you don't have to have trust in the system. And so this trustless model really works, particularly with so much distrust vis-a-vis insurance companies. And the reverse is true as well. Insurers don't feel trusted by their insurance companies. Claims processing. So the efficiency of blockchain in claims processing can be really revolutionizing, because if you automate it, then a lot of the time spent on paperwork and waiting time and checking in and following up and all the human labor and cost that comes with it can come down. And again, smart contracts, they're growing, and it's obviously not a perfected system, and we're going to go there. But the fact that blockchain has a smart contracts feature really suits the insurance world. At the same time, insurance tends to be an extremely regulated area, and where concerns are managed that are substantial from a public good perspective. So right off to mind come cyber attacks. The size of the blockchain industry necessarily means that there is an eye for cyber attack, and therefore blockchain needs to grant that protection so that people are comfortable providing the data into the chain. The integrity of the data needs to be maintained, because if there is the possibility for fraud in the process, then the type of data we're managing here is extremely sensitive. The operational cost, for as much as there are increasingly efficiencies, there is still a scalability issue today, as well as privacy laws. Privacy is a big issue around insurance and blockchain, because while it is true that any insurance provider, including insurtech, so any provider in the tech space, including in the blockchain space, has to comply with any and all regulations that apply to an insurance provider otherwise, there are features of blockchain and of some of the products that are being presented that might make that compliance complicated. And at the same time, and to the point that others made, we need to make sure that our regulations really meet the innovation. And so if we have a framework created around privacy, fundamental rights, and the like that does not reflect the intricacies of the process, then that system doesn't work. And curbing innovation, we're here to see it, just won't work, just won't happen. So with that framework, and that's sort of where we are philosophically almost, this case study will really focus on three things. Smart contracts, which at the end of the day have been heavily exhausted, so we can just touch a little bit on how they operate within the insurance segment, particularly in this figure of an oracle, which is how you get the data into the system. Because the big question is, okay, this is great, all automated, but how do I really know if the tree fell over the car? How do you get that information to automatize it? So we'll get to that. Afterwards, we're going to talk about P2P, which has been also heavily discussed, but how does P2P insurance really work in this space, the success cases, and what we've seen in terms of growth. And then we're going to touch on parametric insurance, which is sort of revolutionizing in some ways, but in some ways has also been with us for a really long time. It just wasn't within the crypto space and or the blockchain space, better said. And how parametric insurance is actually today being used to fight climate change and to get us to places where it's clear that blockchain is being used for the quote unquote good of the world. And this is where I start lining up, right? Because there are incredible things happening around the technologies that are being provided. And I'll just drop sub-Saharan Africa. So we're going somewhere cool. And then I'll just wrap up with conclusion. So jumping into the smart contracts, TBD what it is. Some people know what it is, others don't, others define it, others don't. But what we have here really is an automation of a process between two people with no intermediary. Smart contracts vis-a-vis insurance claims can only be used for certain types of claims. A good example of this is that today you still have instances where you need physical appraisals. And for that, you can't use them. And so that's sort of somewhere where you need to, there are types of insurance where you simply carve out everything that we're going to be discussing. The other aspect, and this goes back to sort of thinking about smart contracts as contracts and the law and the like, is the need for dispute resolution in some contracts. So smart contracts today don't have a dispute resolution mechanism. Although blockchain in and of itself could be used for setting up a dispute resolution platform, and that might be an interesting topic to be discussed further, not today, that's not the case today. And so the smart contracts that you'll see are really if then. If the flight's delayed, I'll get the payment. That's it. I don't get space to say, wait, but there was a car accident and that was the reason, or that was a mistake. I'm so sorry. No space for debate. And the other very relevant aspect of this for comprehension is data and how do we get the data? So in the insurance, insurtech space, you hear a lot about oracles or IoT, the Internet of all things. So effectively what happens is the providers of insurtech will partner up with oracles, and oracles are third parties that are credible. In a lot of instances, they are governmental entities, which provides great assurance to the system. In others, they aren't. So a good example is for thinking a pet insurance, your oracle would be your vet, right? So effectively, the platform relies on the vet and on the oath of that vet to say this and that was conducted and requests the backup. So long as whatever the vet writes in matches the policy, it's automatically triggered for a payment. On the one hand, on the other hand, and we're going to be talking about a very interesting possibility that insurance opens in the blockchain space, which is life insurance. Another possibility is, for example, track records for debts. We all know that's the one certainty. Well, I guess there's also taxes. So it's taxes and debt. But we all know we shall die. And once that day comes, it's going to be registered probably. There is no real mechanism today whereby that governmental agency that records my death will immediately trigger the life insurance and guarantee that my family would get the money that is under the claim that they would have otherwise. And there are billions of dollars every year that get lost in the system because of this. So we see a lot of advantages in this process in terms of the automation, cost reduction, and the like. We still are struggling in the smart contract space with obviously the regulation as we discussed, but also, and this was touched upon earlier as well, which is interesting to think about as a lawyer, the fact that for any smart contract, particularly in this space, because that's what we're analyzing, I'm not a programmer and I'm a lawyer, right? And so I am 100% tied to the need to a programmer and exposed to bugs that I can't control. So how do we fix for that? Does that mean that law school becomes an academy for coding? Maybe. Not only, but maybe. So that's sort of the spiel on smart contracts. And this is how the insurance space gets processed around blockchain. Examples of this phenomenon are there, and they're very successful. We, on the P2P side, so P2P, peer-to-peer, right? Peer-to-peer insurance. How does it really work? So contrary to your traditional insurance model, where you have the insurance sort of beast that is out there, P2P insurance really works with a small group of people that come together and they combine their premiums to insure against risks. So when a loss occurs, everyone, well, taking a step back, everyone contributes to X to the pool, right? So when loss occurs, everyone takes out of the pool and covers that individual. Because each insured is responsible for the entirety of the group's risk profile and refund, they have a very big incentive to maintain low any type of big cost and fraud, because there is direct accountability. So when we think P2P in insurance, we really think about sharing economy. There is this idea that we're all working together to make this product work, similar to your Ubers and the like. So it's almost like we're taking 150 steps back from until the early days of insurance, where insurance started off like that. And then it became sort of the beast mode. And we're now seeing movements of people just saying, no, I'd rather do this in this small community. Mind you, the small community still needs to fulfill with a number of regulations and rules so that it is considered an insurance provider and can lawfully provide that service. And so what happens is that you have players in the market that qualify for it and bring together these communities. The defining feature, which in my view is the key success to P2P insurance, is how you or they manage the premiums. So effectively, when we think about your traditional insurance model, the way it works is that you make monthly payments or yearly payments. If nothing happens, the big insurance company keeps the money. In P2P insurance, this is not the case. There are a couple of models of how you can direct it, but effectively, you either return the money back to the group at the end of the year, whatever wasn't used towards the claims, or you donate it. And so what you've seen is very interesting models of charitable organizations really profiting from P2P insurance, and this community-based system being super successful. Lemonade is here in the United States. It was the first US-based P2P company to officially announce that it operates as an insurance carrier, which from a regulatory perspective has a ton of weight. They're not everywhere, but they combine distributed ledger technology with AI for a very personable customer experience. It's actually fascinating. I'm a client myself. And the way that they do it is pretty much they have a fixed fee that they charge to each of their customers, and then the rest is either allocated towards the future claims and then it gets back to folks, or you can decide how much, I believe it's up to 40% of what they make, gets donated, including for it's the parametric insurance point. We're going to get there, but basically they too have a foundation where they are working on, you basically can be part of the growth of the insurance space and climate change via this donation. So it's not just your Planned Parenthood or your ACLU, is also towards the space if that's something you desire. There are great examples in Europe as well. And indeed, you've seen this space thrive. And I think today Lemonade has all sorts of insurance products available. Their valuation is really, or was through the roof when they did their IPO. And some people even called it absurd, but indeed it's revolutionizing what you're starting to witness. This is a complete alternative model to your otherwise hated insurance company. So effectively, the incentive is that in a peer-to-peer insurance model, it's the policyholders who benefit from fewer claims that are filed. So rather than having an incentive to overly tax the entity, you have an incentive to underly do so. In terms of the fraud component, which we also discussed earlier on, there is a small community here. And so with that in mind, you have less of an incentive to commit fraud. You go completely over any type of broker. You could get to a reduced dividend or premium depending on scalability, just because of the way that the system is automated and efficiency. You can always back up your claims with a traditional insurance. So you could have both, but you could basically contract your P2P for certain types of expenses, and then for quote unquote exorbitant amounts or extraordinary events, go to your big insurance provider and combine them both. There is a real idea of shared responsibility and a very high degree of transparency. There are obviously some issues around regulation, and still, I think societally, the adoption of P2P models is still being integrated and maybe digested even. And so it might not have reached its full potential just yet, because there is some education that needs to be done vis-a-vis the population in selling this product. And this really leads us to parametric insurance, which might or might not be on a P2P basis. But effectively, when we think about insurance today, we really think about an indemnifying base for insurance, meaning there is a loss incurred, there are certain policies that measure that loss or cap that loss. And with that loss, I'm made whole by an insurance company on the basis, or assuming that I've contracted insurance for that coverage. Parametric insurance just takes a completely different approach and says, no, what we are actually insuring is the probability of a predefined event happening. So to the extent that event happens and that parameter is met, so that you trigger that parameter. And a good example is major hurricane, earthquake, floods. If that happens, then you're paid out. This is automatic. I don't need to assess your loss. There's no investigation of loss. And so effectively, you have a trigger to be met. And once that is met, you're paid out. The efficiency in this process is extremely beautiful, because a lot of the inefficiencies around insurance models really are about the fight around the claim and the claim amount and the loss amount and etc. And once again, going back to our Oracle friends, we know that blockchain insurance really works when I have a trusted third party that can come in and say, yep, it happened. So a good example for something that really works around parametric insurance are natural disasters. You have agencies all over the world that track weather, that track seismic activity, that track, another example, flight delays. And so the automation of this process, so long as you can rely on such an agency as your Oracle to provide you the data, is extremely efficient. So that off-chain data source will capture the data on usage and will transmit it to the insurance provider that can then say, okay, this took place, 30 days, you have your money. Examples, flight delay insurance, I've touched upon it a number of times, but actually the French insurance giant AXA was testing out, I'm not sure exactly where they are, but was testing out Fizzy, and which was a flight delay insurance program whereby they could track the flight times. So long as you pass the 2-hour threshold, you are automatically compensated. A big industry, as we've discussed earlier, is also, or possibly could be, life insurance, where in the US alone, there are approximately $7.4 billion in unclaimed life insurance. And so it's very hard to understand why there is a need for the grieving beneficiary to go and file a claim and go after, particularly at a moment of distress, over having an automated system around it. And the last, or the sort of the big one on parametric insurance really have been natural disasters. So where we've seen it the most are natural disasters, and developing countries where access to insurance is very problematic. And we all know there's no such thing as climate insurance. And so how do you really go about some disasters that in amount, they're minimal? And so they minimal in the sense that if there is a flooding in someone's planting field, how would they really go after that money vis-a-vis a big insurance company? Would they even contract insurance in that circumstance? Low dollar amounts in the sense of cost, but significant damage to the population. And so our friends, once again, our Lemonade friends, actually in March of this year, launched the Lemonade Crypto Climate Coalition, where they're partnering up with a weather tech company called Tomorrow.io. And what they do is in sub-Saharan Africa, and they've started there, but they've announced that this idea could be brought to South America, Asia, and anywhere else really that you have crop fields. They basically measure up certain climate events through a monitoring app via their Oracle Tomorrow.io. And upon that event taking place, there is a direct payment made to farmers in sub-Saharan Africa. On the crop insurance space, there's actually also a big player in Germany called Etherisk. And they're also focused on farmers in developing countries and on this idea that farmers often lack access to insurance because of the low margins for insurers. They don't have a real incentive to even contract with folks in this setup. And so the very interesting thing about what can happen is access, right? You have the impact on someone's life and effectively on hunger and climate change from the possibility of parametric insurance is not only undeniable, but completely revolutionizing. There is this, when you can bring compensation and means of living through blockchain to a continent like Africa in sub-Saharan setup around agriculture, it's clear that blockchain can have a huge impact to people, in this case farmers, who really need help. In this context, a lot has been discussed about the environment and blockchain, and effectively Bitcoin can or has, or even Ethereum. There's big critique around how they impact, of how their development and their mining impacts climate change. Lemonade is actually now working with a blockchain called Avalanche that is designed to be low cost, environmental friendly. And not to say that this is the only one that will be there, but effectively what you see in this fast growing space is that when you have issues that come up, the reaction is just almost immediately. And you have so many brains put together into how to improve these processes without, again, the need for centralization and the need for governmental intervention. So parametric or index insurance is also called index insurance. Obviously has great things in terms of sort of moral hazard is minimized. You don't really have the claim aspect of it. Automated, super efficient, timing of payouts, access, all that. But obviously, you still have the problem of to get to markets where, if we're saying that there is a scalability issue on the US and the EU and Asia, continents like Africa make all of this much harder. And so there is a clear work to be done on enabling or helping these societies enable the environment for parametric type insurances, and really to work on awareness raising campaigns of how there is a sizable component to this that is participation and getting people to sign up. And so as my passion for parametric insurance is obviously clear by this point, I should really wrap up in saying that, in my view, there is no real future to insurance without some sort of disruption. It seems like we are in a great path. Whether and how that path will be trailed further to address the inefficiencies is still to be determined. And I do trust that the blockchain space and all the Web3 space really is extremely solution oriented. And so the solution orientation will get us to endless positive results. At the same time, of course, the issues and the challenges are very visible, and particularly with respect to privacy and security concerns, we'll need these addressed. And we'll need these addressed in cooperation between the players and the authorities. But effectively, to see disruption coming from the power of the people and the hands of the people, it's something that we can all just be in awe of. And with that, I will thank everyone for their time, and I'm open to any and all questions. If not now, I'm sure folks can find me.